Hello viewers, welcome to my channel. I'm Hasham Ali Khan. So now I'm starting the next problem number 10 on incomplete records. Already 9 main problems I have completed, and so many short problems and MCQs I have done in the last videos. So don't join in between, you may not be able to understand. So my suggestion to all of you, watch from the beginning. First you watch the very first video on theory on this topic of incomplete records. Then you watch the all short questions, MCQs, then you come to the main problems. So if you have not watched, please watch the first videos and then come here. Before starting the 10th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So always keep a copy ready before watching. Take a screenshot of the notes which I have written on the board, then I'll explain all the points of problem number 10. Come on, now I'm starting 10th problem. Sevket Christakos has been in business for some years but has never maintained a full set of accounting record. This sole trader, Sevket, started the business last some few years but still not kept the complete accounting. That means incomplete records. However, the following information is available for the most recently completed financial year, which ended on 28th Feb 2018. The year ends on 28th Feb 2018. Assets and liability on 1st March 2017. 1st March 2017 is the beginning of the period, and 28th Feb 2018 is the end of the year. Now, the data on 1st March 2017, beginning of the year, 8% bank loan 2020, bank overdraft, trade payable, trade receivable, electricity outstanding, petty cash, shop fitting valuation and inventory. These are all the items given on beginning of the year, 1st March 2017. EBIT, calculate Sevket's capital on 1st March 2017. So we are required to find out how much is the capital of the sole trader Sevket on 1st of March 2017. So we already know capital means the assets minus liabilities. Take the total of assets minus total of liabilities, we'll get the capital. So here in this table I am finding out the capital. Calculation of capital on 1st March. Details, dollar, assets. Now you have to identify which are the assets and which are the liability. One by one we'll see. 8% bank loan. When a business takes a loan, it's a liability. Bank loan taken is a liability. So here in the liabilities I've taken 8% bank loan 2020 5,000. Second item is bank overdraft. Bank overdraft is a temporary loan from bank. So again it is a liability. Whether it is a bank loan or bank overdraft, both are liabilities. Second, next one, trade payable. Trade payable is the amount due to suppliers. It is a liability. So trade payable 3,200. Next, trade receivable. Trade receivable is the amount due from customers. That's an asset. So trade receivable is an asset, 2,000. Next comes electricity outstanding. That means it is the expenses owing by the business to electricity department. It's a liability. Electricity outstanding means the amount due to electricity department. So electricity outstanding is a liability. Next comes petty cash. Petty cash means cash on hand. It's an asset. So petty cash I have taken in asset side. Next comes shop fittings. It's an asset, non-current asset. Shop fitting. So asset side shop fitting 20,000. Last one, inventory. Inventory is the stock of goods which are unsold. It's an asset. It's inventory. So whatever items are given in the problem, all the items I have marshaled into assets and liability. That's the only thing you have to remember. What are the assets and what are the liabilities? Take the total of the assets A. denote it as A. 25,000 is the total of assets. Now total of liabilities, take the total B, denote it as B, 15,000. So 25,000 are the total of assets, 15,000 is the total of liability. Assets minus liability is equal to capital. So 25,000 minus 15,000, 10,000 is the capital. First bit completed, A bit over. Now B bit. His records also reveal that during the year ending 28 Feb 2018, credit customers had paid $45,000 by check. Cash taking banked total 53,200. What do you mean? Cash taking banked $53,200. It means the cash sales. The business has sold the goods for cash and immediately that cash is deposited in the bank. That is called cash banked. Now, Sevket had taken $21,000 from the till for his own use, drawings. So during the year, the owner has taken some money for personal use, that is called drawings, 21,000. The amount owed by credit customer had increased by 50%. That means the trade receivable. Beginning of the year, trade receivable was how much? 2,000. At the beginning of the year, trade receivable 2,000. And it is saying that at the end of the year, trade receivable had increased by 50%. So 50% of 2,000 is 1,000. Add up 1,000, 2,000 plus 1,000. 3,000 will be the closing trade receivable. So what it is saying is the amount due from customers had increased by 50%. So whatever it was there at the beginning of the year, to that we add 50%. So here 2,000 plus 50% means 3,000 will be at the end of the year. Now B question. Calculate the total sales for the year ended 28 Feb 2018. Second question is asking you to find out the total sales. So here you can see calculation of total sales. For calculating total sales, we can make trade receivables ledger control account. Already in so many problems we have prepared. Hope you are perfect. Now trade receivables ledger control account, debit side will take the opening balance of trade receivable. How much is the trade receivable opening balance? 2,000. So balance brought down, opening 2,000. Similarly, closing. It is given the problem that at the end of the year, trade receivables had increased by 50%. Opening balance are taken here, debit side. So credit side balance carried down, closing balance. 2,000 plus 50%. 50% of 2,000 is 1,000. So add up 1,000, 2,000 plus 1,000 is 3,000. This 2,000 opening, 3,000 closing. Now how much cash is received from credit customers? It is given credit customer had paid 45,000 by check. That means the business has received checks from the credit customer. The entry will be bank account debit, trade receivable credit. Always I told you every time, keep a notebook beside you while watching the video. Because whenever I say something, you should immediately note it down. Then only you can be able to remember. Otherwise, you'll forget it. So, cash received from credit customer. Actually, check receipt. When we receive the check, bank account debit. Trade receivable credit. So, trade receivable account credit side. This trade receivable account credit side. Cash book bank 45,000. Right? That's all. We got all the values. Opening balance is given in the problem 2,000. Closing balance, it is saying 50% increased. So 3,000. Check received from credit customers. So here 45,000 over all the items we have taken. Now take the total on the credit side. 45 plus 3, 48,000. From 48,000 minus 2,000, you will get 46,000. So what is this 46,000? Credit sales, balancing figure. These credit sales are not given in the problem. We have prepared the account to find out credit sales, right? But there are two types of sales, cash sales as well as credit sales. So now we are calculating total sales. Cash sales are given in the problem 53,200. It is given cash taking banked total 53,200. That means goods are sold for cash and that cash is deposited in the bank. Cash sales 53,200. Credit sales 46,000, just now we got. And apart from that, drawings. When the owner has withdrawn, we can take it along with sales. So here cash drawings 21,000. The total as the sales are 1,20,200 is the total sales. Second bit complete. Now third bit it is asking you, calculate the total purchases for the year ended 28 Feb 2018 and examination of the business bank account. Acha here, during the year ending 28 Feb 2018, Sefket paid his supplier 42,700 by check. Sefket is the owner of the business. He has paid to the credit suppliers. How much they have paid? 42,700 by check, and had received a cash discount of 2,300 cash discount received. The amount owed to credit supplier on 28 Feb 2018 had decreased by 20%. Here in trade receivable it is given that 50% there is increase, but in this trade payable it is given that 20% decreased whatever we have in the beginning. Then calculate the total purchases for the year ended 28 Feb 2018. Finally we have to find out the purchases. The trade receivable account is prepared to find out the sales. Trade payable account is prepared to find out the purchases, right? So trade payables, ledger control account, debit side, credit side. First of all, opening balance we have to take it on the credit side. How much is the trade payable at the beginning of the year? 3,200. 3,200 is the opening balance. So here I have taken 3,200 opening balance. Balance brought down opening. Receivable will show debit balance. Payable will show credit balance. Now closing balance 20% decreased. So balance carried down closing 2,560. How we got this 2,560? It is given that 20% decreased. So how much was at the beginning? 3,200. 3,200 minus 20%. That means first you calculate 20%. 3,200 into 20 by 100. 3,200 into 20 by 100. You will get 680. You are going to get 640. Sorry, not 680, 640. You will get 640. So deduct 3,200 minus 640. You will get 2,560. This is the closing balance. Here carried down, so opposite side here brought down. That's it. Now it is given that checks issued to credit supplier. How much checks have been paid? 42,700 checks were issued to supplier. When we issue the check to supplier, write down the entries: trade payable debit, bank credit. Trade payable debit, bank credit. When we deposit the money in the bank, bank will be debited. When we issue a check, bank should be credited. So trade payable debit, bank credit. So here trade payable debit side. Cash book, bank. How much a check is issued? 42,700 checks are issued. Now discount received. Discount received is an income, and incomes will be credited. So discount received account will be created. So debit should be given to trade payable. So entry will be trade payable debit, discount received credit. Trade payable is debited. So debit side, this is the debit side. Debit side, discount received. Discount received 2,300 over. All the items we have taken. Simply we have to find out the purchases. Debit side, if you take the total, it is coming 47,560. Debit side, it is more, 47,560. From 47,560, deduct 3,200. Only one item is there on the credit side. 3,200 you deduct. The balance is purchases. The balancing figure purchase are 44,360. So 44,360 is the credit purchases. So we have calculated credit sales, we have calculated credit purchases. Finally, it is given an examination of the business bank account showed the following item of expenditure had been paid by check. So when the bank account is analyzed, bank statement is analyzed, so what are the payments made from bank? Wages paid 15,000, electricity paid 1650, rent rates paid 4,000. And on 28th of Feb 2018, end of the year, closing inventory was 1860. Sevket decided not to depreciate his shop fitting. Actually, shop fitting is a non-current asset. Normally, depreciation will be there in non-current asset. But here it is given, Sevket does not want to provide depreciation on non-current asset. Now, a payment of $400 for electricity used during the year was outstanding. The electricity was used, but payment was not made. The outstanding amount end of the year 400. The outstanding amount end of the year will be added, and outstanding amount beginning of the year will be deducted. How much electricity outstanding at the beginning of the year? 300. This 300 were outstanding for the last year, and current year outstanding is 400. So what you have to do is, electricity payment made is 1650 in the bank. From the bank, electricity paid 1650. But 1650 we have to adjust for outstanding. Current year outstanding will be added. Last year outstanding will be deducted. So current year outstanding is 400. Add up. Last year outstanding is 300. Deduct. So 1650 plus 400 minus 300, 1750. Next one is loan interest at 8% per annum had not been paid. There is a loan. Here you can see bank loan. Percentage is 8%. On what amount? Loan amount 5,000. This Sevket has taken a loan from bank of 5,000, on which interest has to be paid to bank 8%. 8% means 8 by 100. So 5,000 into 8 by 100, you will get 400. Yes, 400. That 400 interest is outstanding, not paid, but it is the expenditure of the year. That's why we should take it here, interest on loan 5,000 into 8 by 100, 400. This is the expenditure of the year, but not paid. Now, next, prepare an income statement for the year ended 28 Feb 2018. Finally, it is asking you to make the income statement. This is the income statement. Income statement for the year ended 28 Feb 2018. Revenue. Revenue means sales. How much total sales we have calculated? Here you can see total sales 1,20,200. Same 1,20,200. From sales revenue, we deduct cost of sales. And remember, cost of sales means opening inventory plus purchases minus closing inventory. So opening inventory, here we have, you can see here inventory 2,500. This is the opening, beginning of the year. So 2,500 opening inventory. To this we add the purchases. Purchases we have calculated here. How much are the purchases? 44,360 are the purchases. So 44,360 purchase. Add up both, less closing inventory. Closing inventory is given in the last paragraph. Last line of the problem, it is given closing inventory. That is 1860. Deduct 1860 minus. This is minus. You will get 45,000. So 45,000 is the cost of sales. Deduct cost of sales 1,20,200 minus 45,000. 75,200 is the gross profit. So what is gross profit? Sales revenue minus cost of sales. And how to get cost of sales? Opening inventory plus purchases minus closing inventory. Now to this gross profit we add other incomes. Here in our problem, other income is only one, that is discount received. Discount received will come into other income, and this other income should be added to gross profit. So here you can see discount received 2,300, this is the other income, this will be added to gross profit. So 77,500 is the total profit. From that we deduct the expenses. Now expenses are given, wages 15,000, no adjustment, nothing. Wages paid 15,000, I have taken. Electricity 1650 is paid. 1,650 is paid, given in the problem. And end of the problem, it is saying 400 rupees are outstanding at the end of the year. So this 400 will be added because it is current year's electricity bill amount. So we add 400. Similarly, at the beginning of the year, there were outstanding for electricity 300. This is for the last year. This outstanding 300 is the last year which was not paid. Now we are paying. So deduct it because we have to take only current year's charges. We are following accrual principle. According to accrual principle, only current year income, current year expenditure should be taken. If any expenditure relating to last year, it should be deducted. So 300 rupees deducted. 1750. Rent and rates, no adjustment, directly 4000. Last one, interest on loan. Last line of the problem, it is given that interest on loan has not been paid. So we have to calculate how much is the interest on loan. 5000 rupees loan, 8% is the interest. 5000 into 8 by 100, 400 rupees is the interest on loan. Take the total of the expenses, it comes to 21,150 is the total of expenses. Deduct total expenses from the profit. Profit is 77,500. 77,500 minus 21,150, 56,350 is the profit for the year. That's all. In this problem, 4 things we have prepared. First, it is asking you to calculate the capital at the beginning of the year. Secondly, it is asking you to calculate the total sales. Thirdly, it is asking you to calculate total purchases. And lastly, it is asking you to calculate the profit for the year by preparing income statement. Hope you understood my explanation. So this is the end of problem number 10th. Inshallah, we'll continue the 11th problem in the next video.